The fund management and the fund industry in Europe is used to deal with these regulatory avalanches or headaches in case of new initiatives from the European Commission or other authorities. And one of the new regulatory headaches will be, for sure, the value for money assessment as introduced under the retail investment strategy. The implications are very interesting if we look at the current state of the fund management business in Europe. And that is because professional or independent fund management companies have been growing since the introduction of IFMD and very recently have undergone a process of consolidation. So we end up having a handful of professional or independent management companies across Ireland and Luxembourg, which are the main European gateways. And so if these new rules on the value for money assessment make this management company as the gatekeepers to the market, right? Because they will have to make sure that their funds are fairly priced and they don't charge costs that are undue or disproportionate. This new onus might conflict with the fact that they have a commercial relationship, nevertheless, with these promoters. They help and assist in the life of the funds they launch. And so the question is legitimate. Can we really trust these gatekeepers overall? In this video, we'll talk about these implications of the new value for money assessment, but also more broadly about the story of the value for money assessment and how the rules have been designed in Europe. Let's dive in. The value for money assessment is not entirely new in the fund industry at a global level. We surprisingly have a first example of value for money assessment carried out in the US, where the so-called Gartenberg principles were minted for the first time. From the US, we then moved to the UK, where the value for money was introduced in 2019. And the US and UK model are very similar in that in the UK there is also that element taken from the US of having independent directors that assist in these yearly pricing and cost evaluation exercises. But not all value for money assessment are made equal, and especially not all value for money assessment want to pursue the same goal. In the US, this assessment takes place in the context of renewing investment advisors' agreements on a yearly basis or other timing. And so basically, when these exercises are carried out, it's mostly to check the trustworthiness of the advisor to make sure that basically there are no excessive or undue costs that have been charged to the funds. In the UK, which will be also the case of Europe, these assessments are introduced exclusively to support retail investors to ensure that they can have exposure to the fund market, same as any capital market, and subscribing to products that basically can offer them a value, also because the charges of these products are fair and not disproportionate. In Europe, we see that there is an additional step that is taken in that the value for money assessment translates into rules that are applicable not only to the fund management companies, which should be the product manufacturers, but also the distributors. So let's look at how these rules have been designed by the European authorities. We know that the retail investment strategy comes with a main so-called omnibus directive that contains the principles of the package of legislative measures. And if you want to learn more about the retail investment strategy, we also linked an article in the description of this video. But in Europe, most of the details of the regulation comes in so-called second level regulation. So we will have to wait for ESMA and the other authorities to give us the details on how to structure pricing process and the pricing document, that the pricing structure that fund management companies have to create, as well as for what concerns the criteria to evaluate costs and see when these are proportionate or not. But the Omnibus Directive gives us already a good indication of the main areas where we have new rules for fund management companies and UCITS and of alternative investment funds. The first area is the one of governance. So the pricing process has to be clearly documented, has to be robust, reliable, and it's an obligation of management companies to have this pricing process in place and to make sure that they can evaluate funds, whether these are at the stage of authorization or they are already on the market. There is again another area that is captured by the rules is the one of the assessment. Fund management companies will have on a yearly basis to assess their funds against this pricing structure. And also, in certain cases, we are talking about the funds that are exclusively for retail investors, also against some industry benchmark, which we will discuss as well. There is an element of reporting. It is also captured by these new rules, in the sense that when a management company finds out that a fund has disproportionate charges, they have to report it to the custodian, the depository, and also the authorities where the management company sits and where the fund is established. That is because this fund will have to be likely removed from the market. Lastly, there is also an area of enforcement where we will see new rules, because management companies will also have to work proactively to make sure that if there are funds that have charged excessively their investors, those investors are reimbursed. The new rules introduced on the value for money assessment receive and in a way close also the circle on the issue of undue costs in the UCITS and alternative investment funds, which was a supervisory endeavor that started already in 2021, and ESMA was on the lookout already for all these funds that were charging excessive fees, and came out with a proposal in May of 2023, which is received by and large entirely in these new rules, and so it closes also the circle on the issue of the undue cost. The benchmarks is another element of or bone of contention, if you like, in the industry. The idea is that without creating new reporting obligations, product manufacturers will have to provide to the ESMA and to the other European supervisory authorities the data on cost and performance that they already have to provide to distributors. And this will help ESMA to create a database, some sort of official benchmarks, which will have to be used in the pricing process for retail funds, so that basically retail funds can be, as part of the process, compared against the official benchmark, if you like, to see if they can offer value for money and can be on the market or not. There has been some discussion over this benchmark. Of course, now at this stage, when we don't have yet second level regulation, we can only speculate how this benchmark will look like. Likely there will be a benchmark per fund sector or segment, and then within that segment for the style or the strategy, for instance, bond funds, and at the same time, the same will be also for equity funds. And then we can presume that there will be some sort of ranges for what concerns cost and performance. So we can assume that basically there will be an acceptable range or a non-acceptable range, right? Or else a dichotomy between the ranges that are acceptable and the ones that are not acceptable. But we could also think that there could be a third category of a range whereby the costs and the performance need some monitoring before they can either become acceptable or unacceptable, with all the consequences of the fund being removed from the market or not getting access to the market. For the time being, this is all speculation, but it seems to be in line with what happens in other countries as well. Lastly, just to give a little bit more of context, there was already with the PRIPS regulation some sort of progress for what concerns the cost. And in fact, the list of costs under the PRIPS regulation is the baseline, the standard for what they're called due cost in the value for money assessment. However, in the PRIPS regulation, we see the main goal is to help retail investors with the selection of investment products of different ranges, and this is where the PRIPS is mostly a disclosure, right? There is no active filter, no policing by European authorities, because also most of the European authorities don't want to receive the PRIPS kit, and if they do, they don't necessarily look in these documents, but they analyze them for other statistical purposes. And so basically the aim of the new rules is actually to have an active policing towards funds that charge excessive cost, to make sure that this cannot go to the market as they stand. And so basically the vision of the European authorities is one, to shift the onus not on the national competent authorities across Europe, because it was clear that ESMA said that regulators should not become price regulators, instead to shift it on the management companies that basically have flourished over time, over the course of the past 10 years, and are in this business of offering their professional services, if you like. And so this brings us to the last point, which is what will be the implications? Can we really trust these gatekeepers, right? As we said already at the beginning, in Europe we face a situation where the majority of the fund management business is concentrated into the hands of few companies that became very big and that can ensure, of course, economies of scale and efficient management of funds, in one with the expertise of their employees. But at the same time, we also know that for them to be professional management companies, they have a commercial relationship with the promoters they help in launching funds, right? They might have an interest in having more funds, which they can offer service for. The question is legitimate as to whether we can really trust these professional management companies to act as gatekeepers, because basically that's the idea of the European authorities, is to shift the onus once again on these management companies to make sure that if there are violations, these are reported, investors are reimbursed, and these funds get out of the market. The way the rules are designed seems to suggest that we should really trust these fund management companies, because member states shall make sure that fund management companies employ this robust pricing process. Some of them were already scrutinized when ESMA was going after the undue cost of AIF and UCITS. And so basically it will be in their own interest to support the market to get to a higher standard in this case. At the same time, we also have some anecdotal evidence that shows us that this conversation on costs are already very frequent with certain fund promoters that have their funds managed by these professional management companies. There is more to come on European regulation. As always, thank you very much for watching and stay tuned.